good? What's good? Today is April 8th, 2024. And I don't even know if you guys even realize it's kind of just even hitting my dome. We are officially in Q2 of 2024. And before you know it, we're going to be in Q3, Q4. 2025 is just right around the corner. So, as we can see over the weekend, what tends to happen with this new regime of the ETS, Bitcoin ETS, that is, price has jumped back up. So, Bitcoin is at 71,000 and some change. Ethereum having a nice candle. I do want to briefly talk about the Ethereum potential ETF that may or may not be coming out. But then the main topic today, do you have your checklist? Like, do you have your step one, step two, step three to get ready for this halving and then post halving? Let's talk about it. Thank y'all for coming through. Today, I really want to get you guys to understand the process of, as we move through a bull run, what are some of the things that we'll experience? So, one thing that I can definitely remember last year or last bull run in 2020 was the notion, and it was hard because a lot of things going on to really start to filter out all the information that you need and the information that you don't need. But for example, COVID had just hit. Everybody's like, "Well, it's me, stay inside," all this crazy stuff, right? But nonetheless, opportunities to buy crypto was like just in your face. So I mean, at the time, Ethereum was maybe like 120 bucks, 150. Bitcoin had dropped again. It's like a saving opportunity, saving grace to even buy Bitcoin close to that low again, around like 4 or 5 thousand bucks, give or take. But after COVID, the halving was there pretty soon, like a month or two after. So I remember people talking about it as if this is going to be this monumental thing, and a lot of times with new or retail investors, they're like, "Oh, like on day one of the halving, like boom, we should be going to the moon." And so we got to understand, okay, well, we got to look at the dynamics. What is the typical case for these halving cycles? How do we need to, like I said, prepare for them? And what can we expect once this halving is done? Because here's the thing, there's some things that I'll say in this stream that you're gonna be like, that's pretty accurate. For example, all these like major capitulation dips, typically, like if it ain't happened by halving, typically it ain't gonna happen, right? So now, obviously, this being maybe a little bit different of an economical landscape, sure, anything can happen. But I really love to give the information, the statistics, the data, and not so much my opinion. And y'all that have been watching the channel, you already know that. But we're gonna jump into a lot. And so the best thing about being a part of the Vaults of Crypto, for those who are not involved yet, the guys in the Vaults of Crypto are killing it, by the way. I created an indicator for, it's called the halving profit window. And there's some statistics and some things that typically, if you go with this DCA out strategy towards the overheated time in the market, you should do yourself a good service. So with that being said, what it do? Appreciate y'all for coming through. What's good? What's good? Let's see who we got in the chat. Who we got in the chat? I'm gonna go ahead and actually bring up our checklist real quick. Let me go ahead and share this screen, and we're gonna put up some of these comments real quick. So let's see here. What we got? What it do? Yo, first in the chat. What's good? Cam, how you doing, man? Who else we got? Of course, and Dan T is in the vault, right? He's killing it. You know, we had a chance to have some great conversation, some consultation, all that good stuff. Yes, sir. Here we go. Here we go. Of course, we got, yes, Stefan. What's good? You ready? All right, I'm ready. We got to stay with that heat. So let's go. Large and in charge. You already know what it do. First live. Well, congrats for making it, man. Silent Goldie, congrats. I think you'll get tremendous value on not just looking at crypto, but learning how to be a savvy investor watching these streams. And so at the end of the day, truthfully, that's what everybody's goal should be, is to how to be confident in yourself first and foremost. To be confident in yourself, you got to have knowledge. So that's what I'm here to provide. Let's see. Let's go. Who else we got? David T, also in the vault. Yes, sir. Finally get to be here for live. Okay, let's get it. Okay. So with that being said, Alberto, what's good? What's good? What's good? All right. Of course, we got Karn in the chat. Fire. Let's go. And once again, I gotta do a plug to PaintSwap. So this right here, that is a Magic Cat. Love it. And you can only get it at PaintSwap, y'all. So if y'all haven't looked into that, that's the brush token on the Phantom ecosystem. There's the first bit of alpha, y'all. First beta alpha, very good project, and it's just low enough market cap to maybe get you 20, 30x from here. You heard it here. So, with that being said, I made these notes, and you know me, I'm all about trying to be detailed. So, we're gonna have this in nice order here today. I want to hit you guys with a nice introduction, and the biggest thing is, okay, I don't know if anyone's fully explained what are the actual attributes, the actual pieces of the halving that are structural to this market that we're in, and how do we need to see it. So that's the first thing. We're gonna do a little bit of a pre-market analysis, a pre-halving market analysis, like what is Bitcoin doing, how's it been going before the halving. Now, investment strategies pre-halving. Typically, it's just a really good idea to try to get a good portion. Like if your bags aren't all the way packed, typically the ratios look better before the halving. You're gonna tend to see altcoins start to win on their Bitcoin pairing after like a long bear market within alts versus their BTC pairing. Typically after the halving, we see that start to ramp up, and that looks to probably be somewhere in Q3, Q4 coming up here. And then post halving expectations, like the gains, like what can we expect? What does that even look like? How do we take profits? Like I said, we got the halving profit window indicator for Volta Crypto members to take advantage of that. So let's get into it. I think the first thing is okay. So the halving. I'm gonna do a soft, like a soft intro to this. So the halving is a situation, and actually let me see if I can actually pop myself back on, and then we'll go from there. So if we are to make this something simple, right? The halving is a structural thing. It's built in the code, right? If you actually learn from Richard Hart, something I had heard him say a long time ago, that originally Satoshi did not put the halving anywhere in the white paper, and I double checked it. The halving is nowhere in the white paper. Now this is something that they put in after the white paper for Bitcoin. Now, this is a structural thing where the block reward gets cut in half for the miners. Now, we have some really, really big mining companies. We're talking about Marathon, we're talking about Riot, things of the like. Now, typically, the larger mining companies, they can do pretty good with the energy costs in terms of still being able to turn a profit as long as Bitcoin is above a certain price. And I can let you guys know their break even as of today's date. Yes, I got the information as of today's date. If they are basically able to mine the Bitcoin, the cost to mine that Bitcoin currently is, give or take, depending on where you're looking at on which mining company in particular, but the average between all the large players is just about like $33,000. So they're on a 2x simply by mining Bitcoin. They're mining it. They're gonna have that cost of 33, 34K, give or take, but yet the Bitcoin is worth 71. So they're at a nice double on that. So that's pretty dang good. Now the thing is, so the capacity for them to beat the other miners is what we're talking about. So they're gonna be now trying to compete for less block reward. And so this is going to be a pivotal thing because it's about 900 Bitcoin per day that are produced. That's going to cut in half to 450. And so if you want to look in terms of billions of dollars of actual value that is, what does that do? That's going to be the aspect of supply being affected. Now, the key is this. With the demand being what it is, the ETS kind of really trickling up in terms of, the aspect of them really wanting to place capital within this market. This is going to be an interesting dynamic to really see this cycle. So we're going to talk about that, but I just want to give you guys the soft introduction. I have a nice article in regards to this. Now, this article was actually written some time ago, but I think it's going to create a base layer for us for just like true understanding of what the halving is and how can we just get a good idea of what we need to do in regards to that. So the first thing is this. Do you know what a block is? Like a lot of times people start investing in crypto and they have no clue the bare bones basics. So we're going to start with some bare bones basics, but we're going to finish with the advanced, super alpha / mega brain type stuff that I try to give you guys if you guys definitely want to take advantage of that. So for example, if we read here, a block is a file containing 1 megabyte of Bitcoin. Okay. So these transactions record on the blockchain. So this is pretty easy. Now miners compete. Like I said, these miners that are all across the world, distributed, and they are decentralized. There's no one entity just basically taking all of the compute power and saying, hey, that I own the rights to all this mining, and I'm just gonna basically take advantage of this. Like it's a lot of miners everywhere trying to basically compete for these blocks, and basically to add the next block by solving a complex mathematical problem using specialized hardware. So these are the ASIC miners and all the new ones that they have as well. So basically producing a random 64 character output known as a hash. So if you guys ever go and look at the transactions, it's going to have a hash right there, 64 characters. You ever counted it? It's a lot of numbers. That's going to be the hash of that transaction. Basically finishing the process of locking that block. And that's the key. There's so many things within TradFi that is not as secure, but the fact that the blocks are locked, you cannot change it. This is what price finality looks like in a span. Now, Bitcoin is a little bit slower, but it does reach finality once the block is closed. Okay, and so the beautiful thing is by completing these blocks, miners receive Bitcoin. So that's pretty cool. Back in the day, we even hear Richard Hart talking about he used to mine on his GPU and his computer. Good for him. So, so how has Bitcoin halving cycle worked, right? So the miners were paid 50 BTC per block. Can you imagine that? Just per block, boom, 50, 50, 50, 50. Like, it's a lot of Bitcoin in dollar value now, but back then it was just like game tokens. Like, it wasn't really, in people's mind, Bitcoin was not even an asset. So why would you ever think to want to hold on to it? It's very hard to hold on to something for a long time. But the key is, if you understand what it is, yes, it becomes a lot easier to hold it. And that's why we talk about some of these other altcoins. Like, if you understand how valuable this stuff really is, you're going to want to hold this joint. Like, hold this joint for a cycle, two even. Obviously, you want to take some profits at the top, but redistribute back at the bottom, y'all. Ride these cycles. You really need 2 good cycles to get that breakaway inertia, 3 to get wealthy. That's the truth. But I'm going to try to just go through here and not read every word, but for example, the rate at which new Bitcoin is created decreased by half for every 110,000 blocks mined. So that's roughly every 4 years. So that's the key thing. You're going to have halving events. So the key is having, right? Let's pronounce it right. Having, not having, every 4 years. So if we want to kind of recount where we've come from, in 2016, the incentive was 12.5 BTC each block. 2020, it basically went down to 6.25, and the next Bitcoin halving expected to take place, guess what, in a couple of weeks, our system will continue until all the way to 2040, and it's just going to get smaller, smaller, smaller. So it's very, very little amount of BTC that are being generated per block. And like I said, per day, because it's several blocks in a day, but per day, that's going to be about 450 BTC. So why does it occur? And Bitcoin's halving occurs as part of the protocol's design as a key mechanism to control the supply of new Bitcoin entering circulation. And I want to pause and pivot right there, because controlled supply is the commodity. That is the asset. Like, y'all, people don't understand. When people have an issue with understanding what Bitcoin is, it's simply because they don't know how the rest of the world works. They don't understand the value in something that has a controlled supply that cannot be inflated away. And that's the problem that we have in a debt-based society, a fiat-based society, is because with the monetary policy, with the fiscal spending that a lot of these governments are doing, and with the interest rate that they play around with at their will, this is them manipulating supply and demand dynamics. So the best thing about Bitcoin is supply is set. You can't mess with it. Right? And then the demand aspects is free market. So that is key. Scarcity and controlled supply. And so the key is this: due to its rising scarcity over time, because that's essentially what is happening. The fact that, okay, imagine, and I like to explain to people that are all into real estate like this. So when you have real estate, we have a whole lot of real estate in the world. It's almost like $400 trillion worth. When you have the aspect of saying, okay, cool, you have land, go ahead and excavate it and do your surveys so that way you can put more buildings. That's new inflation. So, for example, that's new buildings coming into the ecosystem, for example. Now, the rate at which they do that, they can go up, go down, depending on the fiscal spending per jurisdiction or city or whatever. Like, all that, like county, all that stuff is decided by people. And every quarter, every year, they're making these new decisions. Hey, let's build more or let's build less. Do we have more to build this up? But we need housing. Okay, let's just borrow some more money from the government. Okay, they create it, then boom. So there's constant inflation, and sometimes it's like the inflation of housing is up, sometimes it's down, but nonetheless, it's not controlled. It is basically what they want it to be. So, for example, imagine if, and I tell this to real estate people, imagine if they just slowly, imagine if like 98% of all the homes that are ever going to be built are out here. That's it. You know how crazy the price with houses would be because they'd be extremely scarce. That's similar to what Bitcoin is at. Like only like 97, 98% of the Bitcoin, or I would not say only, but that's about all, give or take. That's dang near all of the supplies out. It's just small increments, like fractions of a percent that will come out all the way to 2140. And so we still got a long runway of that supply dwindling down, but yet it's becoming more scarce. So when I explain like that, people are like, oh, okay, I can kind of see, like, yeah, definitely if they're basically not going to really make any more houses from this point on for like the next 100 years. Oh, yeah, of course. I mean, they're going to go up regardless. Housing prices, all asset prices are going to go up. It's the currency. But which ones go up even more are the ones that are more scarce. And if demand stays the same, basically, if people see a value in it, because at the end of the day, people are going to hunt for value preservation. And the key is learn how wealthy people think. They typically use stocks and real estate for value preservation and bonds. Once they realize that, okay, there's a better game, now that these ETFs have come to play, they're gonna be like, oh snap, let me go ahead and put a 0.5%. Let me go ahead and put 1%. And there you go. That's how we're gonna end up with six-figure Bitcoin, but also 5-figure Ethereum, 4-figure Solana, and so forth and so on. Post is gonna be what's gonna be. Everything is going to get that adoption because of new liquidity that is out there, but the choice for people is going to be different. And then once people have a choice, and that choice is something that ends up being good for them year after year after year, then it becomes a habit for them. And then what wealthy people do, once they create a good habit with something, they create a philosophy around it and say, okay, we like this, and we're going to stay with this. Because that's how they feel about stocks and bonds. It has done well for them early on, but there's like it's become so deeply ingrained in them. They're just like, I'm just gonna stick with this. But they'll all learn better. Trust me. In due time, everybody will become somewhat of a person that's not necessarily a believer, but they are going to be aware to a certain extent. And crypto is going to continue to just make other assets look stupid. And that's why we're here, because we're going to be the ones that are savvy and smart enough to say, all right, look, I'm going to go where the getting is good before the average person even realizes it. And that's where all the value is at. So I'm not going on these side tangents. But anyways, let's continue on. Inflation control is what it's doing here with these dynamics. So market forces and economics. The halving event has economic repercussions for both Bitcoin miners and the broad market. Miners must modify their operations to be profitable with lower block reward, very true, which increases competition and drives away less productive miners. That is, in turn, can impact the overall security and decentralized nature of the network. Now, the key is if they haven't already figured out how to sustain themselves, because here's the thing, it's not like they didn't know the halving was coming. They're able to kind of run their averages. They pre-purchase the energy well ahead of time at a fixed cost. And ideally, if they have that purchase right, they can sustain themselves through, even if the prices go back down to a certain cost basis. But typically, yeah, the miners that are smaller or maybe don't have the compute power or energy savings by buying enough in bulk, yeah, they'll just go offline. But typically, this is actually a good thing because we want strong compute power all throughout the world. And yet, even though some of the smaller ones will drop off, they're still going to leave, if anything, hundreds of nodes, but then also plenty of miners all throughout the world, if not thousands. So this is still a beautiful thing. Okay, so here's why it matters. And you'll be surprised. The reason, and I like these answers or this information that they're giving because I find them to be pretty true as well. So usually there's an increase in volatility for Bitcoin following the halving. So this is very true. The supply of available Bitcoin decreases. So that's what we talked about, which raises the value of Bitcoin yet to be mined, making it more attractive asset to investors. So basically, it's like, for example, if Bitcoin or crypto was valued as a PE ratio, so like price to earnings, that's what a lot of people look at for stocks. Oh, price to earnings, price to earnings. That has no relevance to many things in crypto, unless it's like a DEX that actually has some type of revenue. But this is like actually increasing the price to earnings ratio for Bitcoin. It's a ratio that makes it more favorable because simply, for example, if this is a stock and I see the price to earnings, okay, the price to earnings is actually more correlated versus, like, for example, if the price to earnings was like 72x, so that means price is like 72 times higher than the earnings, I'd be like, it's overvalued. But if somehow, right, price deviated and got a little bit more attractive and it was maybe like 10x, so 10 times the price per earnings, but yet the company seemed like they had a lot of good growth left, I'd say it's a better value. And thus it made it more attractive to me. It's kind of something similar for Bitcoin. When the halving gets, like, we understand what the halving does, but we actually are experiencing that outcome. That's a structural aspect to the ratio that is a factor within Bitcoin. So this is key. Now there are other elements that we need to consider, when analyzing Bitcoin post halving and the booms. So with every boom, there's a bust, and with every bust, there's a boom, back and forth, back and forth. But we're getting into that expansion period, which is the very fun part, but it can be a little bit scary if it's your first time, if you don't have the right guidance or experience. So the key thing is this: what I find that is pretty dang cool is more press coverage of cryptocurrencies and Bitcoin happen once we get into this halving narrative and phase. I think this is one of the biggest amplifiers to bring resale because the average person is looking on Twitter, Instagram, TikTok, but then also the news. I can't tell you how many times back in 2017 when people only heard about Bitcoin when it was like at all time highs at like 19 and 20,000. They didn't hear it when it was at 18,000 or 15,000 or 10,000 or 4,000. So the news actually does a good job of bringing attention to whatever they want to bring attention to. In this case, Bitcoin. So that is a sneakily good thing, even though today's news is a little bit different. There's still a lot of viewers for the local news channels that is in your city or your country, whatever the case may be. And then so this is gonna create just a little bit more buzz, and that's all we need. And like Bitcoin needs a little spark to catch fire and then to go with these new dynamics. And so, there's gonna be a new fascination of digital assets anonymity. So a lot of people are like, oh wow, like I can get away from the government. That whole narrative of like, oh, like self-sovereignty, all that stuff starts to trickle back up. Not everything's created equal, but yet people hearing it for the first time, it's gonna spark their interest. Like it probably did yours and mine at one point. A gradual increase in real world use cases for the currency. Now, Bitcoin does a lot better job of, how do you call it? It does a better job of value storage than actual economic purchasing units, right? So, but still that narrative is still going to be had. Hey, you can go use your Bitcoin at this store. Or, hey, I remember last cycle was like, hey, go ahead and pay for Chipotle in Bitcoin. There's a lot of these major companies that just wanted to get a little tagline using Bitcoin, but it was really just to bring in more revenue for their business, where they maybe knew people wouldn't actually use it or they didn't have the rails to actually transact with the Bitcoin. But people who are looking into this stuff because it's hot and popular, they'll be like, oh snap, I forgot I like Chipotle. Hey, let me just go to Chipotle. So that's an example. So, even though we're going to get a lot of that narrative about real world use cases for the actual currency, Bitcoin is not so much a currency yet in today's time. So let's look at some of the history. What I think is super interesting, man, because now I want to talk about strategy beforehand and then what can we expect afterwards, and we're going to jump into this briefly. So if we look at this, what's actually pretty amazing about this is we see how everything gets cut in half, right? So new blocks before and after each halving. We need to understand the price on the halving day, all right? So let me pull this mic just a little bit closer. All right, so we need to understand the price on the halving day. Look at these jumps. If you notice, it is pretty, like, if you just want to say, hey, if I want to invest from halving to halving, that's probably one of the best strategies that you could ever think about doing. Even though you might miss lows and tops. So there's one gem for you, because and other crypto will track, right? Once other crypto continues to get the adoption and to get that mainstay alongside with Bitcoin, Ethereum, Solana. Like we're talking post chain, we're talking other layer ones like Near. We're talking about all this stuff, right? Alluvium, Phantom, obviously. Once, because these things, if they have some use case, for example, layer ones, they have traffic. People want to go and trade on these chains. Games like Alluvium's gonna have traffic. People want a game. As long as there's traffic, the chance of it making from cycle to cycle to cycle to cycle increases. So now the key is like, where is that price at having? So what I want you guys to think about is not just Bitcoin, but think about, imagine buying your Alluvium. What's the price? Like $130, and it's going to be going through its her first halving. What is going to happen this next halving? And think about it. Something that is 3 digits, there may be a good chance that it'll have 4 digits that next time. So for example, the 2016 halving, the price on the halving was just about $650. 4 years later, right? And we let's say you missed the top and you missed the bottom. You still ended up with a 10x. And this is going from cycle 2 to cycle 3. The gains were even larger going from cycle 1 to cycle 2. I'm not even going to talk about that because that may be out of the window because crypto overall has really come into a larger market cap. Now, if you have like a super low cap coin, potentially, but I'm not going to talk about the low cap stuff as of right now. I'm talking about like really large. I'm talking about hundreds of millions or billions of dollars in market cap type coins. And so the key thing is this. Now, the principle that a lot of people, or if you don't know, but a lot of people do know that I say, okay, this is one way to think about it. I think I created something a little bit better. But the price 150 days after. So we're talking about, we're talking about 2 quarters after. Now, a good thing to think about is 3 to 4 quarters after the halving. You're probably going to end up with some more gains. But let's say you just wanted to play it super safe. So you can give this advice to your boomer grandpa or your dad or your mom or somebody that's like, I don't like crypto. Just tell them this. All right, give it 150 days. So that's less than half a year. And just say, okay, what if you can get a 50% return on this capital in half a year? The chances of that happening is extremely high, and it almost doesn't matter, what coin it is, to be honest, because by that time, that's when the bull market is really starting to catch pace and stride, and the stats prove it. But this is like a little bit of that information. But as you can see, it went from $12 to $127. So there's a 10x there. Went from 650 to 750. So, that's a modest about 20% gain. That's still pretty good. But I wonder if they waited another 100 days. What would that look like? But then going from basically 8,800 to almost 11,000 bucks. So nonetheless, there is gains on the table, and this is not even including altcoins. Altcoins obviously are going to have higher returns. So the interesting thing is this stuff, the dynamics are important to understand. What I will do is, if you guys want a little bit more information just on this, I'll go ahead and link this in the chat real quick. But definitely understand the dynamics, because this is how you get that confidence. It's like, I see what I'm saying. I see what I'm seeing. I see what I'm seeing. I know how to explain to somebody else if they ask me, all of that good stuff. Let's see. Let's check the chat. Okay. Cool. Dope. Appreciate that, man. Thank you for coming through. Yes, I got it. I mean, I've been bullish on Phantom for a minute, for a cool minute, and I, definitely accumulated a lot in this market thus far. Okay, so I'm trying to see if I can catch up. Let's see. Yeah, I think we good. Oh, of course, gotta shout out Wade. What up, Wade? Wade in the chat. Appreciate that. Appreciate it. Yeah, man. Me and DCC, we'll be doing more collabs as time goes on. So, all right, let's get back to it. So let's go back to the agenda. So we talked about, okay, some of the things to understand pre-halving, like what the heck is it? let's talk about some of the analysis that we can look into. So let's look at BTC, and maybe we can do a little bit of speculation, just a little bit, and we can look at some of that stuff here. So, for example, this right here, this is something that I created. This is called, I know it's like a lot if you haven't seen this before, if you're a first time viewer. This is called the halving profit window for Volta Crypto members, right? So, but let me take that off just for a second, so that way we can just see the chart for Bitcoin. So I love to just zoom out. At the end of the day, time is your friend. Time is the best co-investor. Like, you're the pilot of the ship. Time is the best co-pilot, truthfully. Why? Because that's how you can get the exponential moves and exponential macro returns. But as we can kind of see, we've already eclipsed. So this yellow line, this is approximately where the halving is going to be, give or take, within a week or so. We're coming up on it. Now, in past time, we have not broken the high prior. A lot of this is due to the new demand that we are having, the constant bid from the ETFs, as we have probably talked about before. Now, when we want to look at this, we need to say, okay, what does this look like? Does this look constructive? I have a weekly chart here, and then we could really start to nail this thing down here. What is very constructive about this is, in any uptrend, if you see very okay, let me zoom all the way in so y'all can see that. Do you guys see this wick right here? These two wicks in particular, and I'm gonna put a box around them. So these two wicks and this one here. So 3 wicks. That is very confidence inspiring to me. Now, why? And this is not even pulling out a whole lot of indicators. This is just learning to read candles and the story, the emotions that happen within the market, and how we could actually utilize this to understand, hey, where are people hedged? Where are people actually putting their money in and betting for the time to come? The price got bought up considerably these weeks, where we seem to be peaking out, and then we draw down during that week, but we have a very small candle in red, but yet a large wick. What does that tell me? It tells me that people are defending their cost basis, one, and then two, people are saying, hey, we still have a heavy demand for this, even though price is going down. The short-term hold supply is currently about like $59,000. So, for example, the short-term hold supply is a metric that we need to pay attention to, because typically that is where a lot of people like to defend their cost basis. So, and we still have a bit of a time before we even get to that point. But from there, I do want to just talk about, okay, where is like the real support? Let's say we have a COVID moment, or let's say we have some type of crazy whatever happened where everybody just wants to sell their Bitcoin in the midst of having 5 new players that are now to utilize the IBIT, the BlackRock ETF. So that's Citigroup, Citadel. There's a couple more, but I'll have to go ahead and show that article. But so with that increased demand coming and more registered advisors pitching Bitcoin to all of their clients, let's look at where the actual support is through the range. So let's go all the way back of price data from here. I mean, almost dang near towards last halving. And what can we see? Let me go ahead and manipulate this. So we have a fixed volume profile. So the reason why I like the fixed volume profile, I just want only a certain amount of data. So we can take some of this stuff off. We don't need that. We don't need that. All right. So let's look over here to the right. So obviously, as you can see, a lot of people bought the low, bought the dip. Hey, so do we here on the channel. But outside of that, you're going to have several different areas of this volume profile that tell us a story of where a lot of people interacted. So the easiest way to look at how we can kind of categorize people who have bought Bitcoin since, really the back end of 2022 are the people that got in below 25K. So those are the OG. They understand the game. The people who have gotten in where they're like, I'm kind of sure, but not really, but I'm going to just take a punt. And so that's in between 25K and just about 32K. And then essentially, this is when liquidity came through in all markets, not just crypto. to lead us into the ETF pump. And then so this is like, all right, the people who knew about crypto that missed it, they FOMO'd here. So let's just kind of outline that. So the people that knew about crypto, but after this candle, like this candle to break through, because a lot of people thought that we were just going to go straight back down and stay in this range, but we broke through. This is a big candle right here in October. And then we trickled up. So all of like the people that are like, okay, let me go ahead and jump on, right? Towards the end of 2023, we have that cohort of people. One thing that you notice, it's a very small cohort of people because price ripped through it. There's not a lot of consolidation going sideways like these other two regions. Now from here, let's talk about this. This range here was like Bitcoin ain't really gonna do too much, right? The people who were fudding it were saying, hey, we need to short it right here. And then boom, this is all, and then let me make this last box right here. This is all ETF money. So if we were to break them up into those cohorts, so then we need to take a look and say, okay, ETF is the biggest reason why we're even above the previous all-time high. That is the sole reason why we're at $71,000 today. Nobody can tell me anything different. Now, what we need to understand is, okay, where does the price tell us something, or where does this volume profile tell us? Where did they interact? Where did the most people come to play at during this new regime of ETF, players? And then so really we could take it from this candle. And the two areas that I see, I'm going to go ahead and put some horizontal lines here. Two areas where a lot of players can play. As y'all can see, we have this area here and then this area right here at about like 58K. What you'll find is that is just right where the short-term holder cost basis is. And so these are the levels. So we can I just want to kind of talk about that history of this cycle thus far to kind of give us an idea. But let's get rid of the rest of this stuff. So what we need to understand is support, truthfully, just based upon volume, is we can have a nice amount of comfortability in saying that we would have some serious support if we ever were to drop down to 58K. And that's with, hey, stocks may roll over. All right, cool. If that persists, let's say if it was something that was a little bit more, I would say a little bit more serious, something elongated, maybe a quarter, like three full months of just, hey, what's really going on here? Or even 6 months. Once again, we have tremendous support here at about 47K. And so that's something to really think about and remember. If there is a situation that something just doesn't go to what everybody expects, a lot of people expect for us to just continue to just trend higher and go to 100K straight away. Yes, that's very well the probability, but you always have to hedge for, well, what if something does not go to what everybody expects? So strategy number one, what I would say to anybody, this is not investment advice. This is me talking to, just talking to the air out there. Basically, the way that I would think about if I'm a new investor, my goal is to say, hey, let's say if I'm a person that had $5,000. So let's go ahead and type this out. Let's say I had $5,000 today. So 5,000. And, that's a nice sum. How do I go about allocating this? Well, what I would do is I'd have a mixed portfolio, right? Large cap, and I'd go for 3 coins. 3 coins. So I'd go for large cap. That's probably going to be something that's in the top 25. Mid cap. And y'all are going to laugh about this. I am not promoting anything in particular, but I'd put a small percentage, right? Guess what? In the strongest narrative that we have currently. Now, the ratios, let's talk about that. Large cap, obviously, would probably be a good idea to do something like this. To say, okay, you know what, I'm new to this thing. I hear that if I invest right here, let's say you don't know anything. Let's say I just invest, a decent amount before the halving. If you wait 4 years, there's a good chance that you'll make money. But sometimes people don't want to wait that long. Most people don't want to wait that long. So, but if you wait 155 days or more accurately or more, I would say advantageous, 40 weeks. So we'll talk about that here in a second. Large caps, let's say the percentage, you go for 50%. That is a good ratio to start with. So 50%. Mid cap, 25%. And the meme AI, because believe it or not, there are some things that are actually a little bit larger market cap that are memes and in AI. So no, 25%. So that structure right there, that would be $2,500 and about $1,200 and some change into each one of these categories. Now that would be a nice basic strategy. So if you have some family that's like, I don't really quite know, I hear this halving is important, I should maybe do something. Because a lot of people are like, oh, do I have to do something immediately right after that? Like, you don't have to do it right after the halving. You don't have to do it right before. But just know the halving is a structural event. Now, what I would also tell that person, side notes, continue earning that sweet fiat. So continue earning money. Because why? You always, as an investor, key thing, always need a cash position. So immediately what I tell that person is your goal is to try to save 50% of what you invested as soon as possible for the months after the halving for the what could happen scenario. So goal over the next whatever from, let's say, April 2024 to the end of the year, so 6 months, goal save, $2,500. And you may not even deploy this money, but at the same time, if we have an event where we do turn over, you still are able to get your cost basis lower, but then again, cut any loss to be something reasonable to where your portfolio is not going to be down tremendously. This is how you hedge for a scenario. So, and if you're a person that's like, okay, maybe I don't see myself saving $2,500. Okay, instead of $5,000, you just only invest $2,500. So this is simple investing. A lot of people don't talk about these small dynamics, but I do want to give examples. This is not, but examples of how to allocate correctly with nice weightings without being too degen, but also not being blind to the fact that there's other things that should get you nice gains outside of Bitcoin. So that's just some general thoughts, some conversation in regards to that. Now, I would then go ahead and say this. Let's see what else we got here. What up from DCC? Thank you for coming through. You already know we coming with it. We're talking about portfolio allocation really quickly. What else we got? So, yes, this is true. So the bulls didn't leave the price hanging. Bears getting wrecked is what those candles mean. Smart money. And the key is this, like on this channel, we track a lot of the derivatives market. And so, yeah, I mean, the key is this. At $72,000, there's going to be billions of shorts that going to be liquidated. In actual real value, that is a decent amount. If we don't have any crazy selling from GBTC during that phase of those shorts being liquidated, or any random whales that just want to take crazy profit, we're going to have somebody that are going to take profit. It's natural. Long-term holders are going to take profit. But, yeah, like those liquidations of the shorts, man, that could, yeah, $80,000 is not too far away. It's really not. So, yeah, what else we got? Let's see. Yes, so there's a misallocation with meme coin market cap. Hopefully that rotates soon. Yeah, like a lot of that money. So a lot of the stuff on like the Coinbase chain, I see some other. Here's a little bit of alpha for you guys. Some things revving up on the Linea chain. So that's another layer one. And obviously Solana with all the memes. Like there's a centralized focus on that. I think it'll contract, but it's not going to go away completely. I think this cycle is going to carry through because once more, I would not say dumb money, but retail investors come in, they are attracted to memes as easily as the next person. So I think we might dwindle away from it from a little bit, but it'll be a constant bid for memes. I'm seeing this whole cycle. So, but yeah, we want our layer ones, we want our GameFi, we want all the other ones, the AI, all these other narratives are going to have its time as well, for sure. Let's see. man, I appreciate it. I appreciate it. Like, yo, I had to say it on the stream. I was like, yo, what's up? But y'all came through with the love, man. I think it was an additional 100 subscribers, but we gotta try to see if we can get to the thou wow. Like, we're close, but we gotta spread the word. So all right, let's continue on. So the key thing is this. Now, what am I looking at here? Let's look at the daily consolidation. Is nice, but we have a nice bull flag at the same time. So bull flag here, here, boom, looking good. And then so this thing is looking to break out, and a lot of the ETF flows are going to let us know how bullish that may be. Now we can also other things that Volta Crypto members get. So and like I said, I put a lot of time in this, y'all. So I made this fear and greed index, and you could use this for any asset, any coin. I know sometimes, like, man, what is the fear or the greed for a particular coin? We could have Bitcoin, Ethereum, Solana. This works for any asset. So if we just want to look at Bitcoin in particular, and there's a 100-day look back. So we have a 100-day look back that gives the average of the last 100 days. We're at 93. Now this is pretty standard in a bull run. Thus far, the time periods to really take some decent action were any time where we got back towards the median, so like 55. But as you can see, there's been a constant bid that has kind of kept us above that level really this whole year, thanks to the ETFs. And so, there's a good amount of greed. But the thing is this: in a bull run, it likes to spend time up here for long periods of time. So if we want to go back and let's just look at this time period, and we can go from, so this is COVID here in March, but we can go from this period in April 2020 all the way to like that first peak. I mean, outside of a small deviation here for a month and a half, give or take, the fear and greed for Bitcoin stayed in between 99 and basically 75 the whole time. And I mean, cycles before that was even crazier. Now, there was more volatility back here in 2017, but as you can see, you have the regime of where it wants to stay, obviously on the upper bound, the upper half, versus really spending most of the time on the downside. And it's clear to see that this is obviously the bear market. So, where are we at? We're at that point in time to where, yes, we have some deviations. So, for example, this was an amazing opportunity, August 2023 to October. But now we're kind of getting back to the regime. Anytime that we come back to the midpoint, that's another confirmation. You want to get a confluence of things that can tell you the same story, but those are potential DCA moments. But so we got a good amount of agreed on the daily. Now the alpha with this indicator is now looking at the weekly. So as you can see, we have just started, like, we just broke the weekly fear and greed indicator, and we're at 95. And in 2024, we're finally starting that regime of staying up here for an elongated period of time. As you can see, right, from August of 2020 all the way to May 2021. So that's a long time. We're talking 9 months of really, really good, retail coming to the market, new projects, a lot of hype, a lot of liquidity. This is what happens. And that is, because we weren't as greedy on that second peak. So there's the divergence. But same thing, going to a cycle like 2017, look how long that we stayed like that. There's plenty of greed. So there's a constant bid in the market, even though there's more volatility. What it's looking to be is the cycle is going to be essentially something, a mixture probably between both, leaning a little bit more towards the 2017 cycle, because this was retail constant bid because he had very, very good economic times. We have moderate to good economic times, but a constant TradFi bid that's going to stay and if not increase. So this is a good sign on this weekly that we're getting up here, we're hanging, and we're just starting. Like, we don't have that much depth going to the right. Like, we have a lot of room to continue to stay greedy or bullish within this market. So that's a good sign to see. So that's the fear and greed. And then obviously, let's go ahead and throw on the Hatter. Did we have any buy signals lately? So once again, and we're using all Volta Crypto indicators. Why rely on somebody else when you can make your indicator? And that's what I did, because I was like, I don't like other people's stuff. So yeah, we did get a little bit of a buy. So typically, so what does this do? This is taking the 100-day moving average. And the sell signals are, nah, this is not for trading, or if you ever want to use for trading, technically you could, but it's really looking for the potential buy opportunities. And then so you're gonna see these green diamonds pop up for just really good potential DCAs at a very low or slash like undervalued time period. This will only flash off on a buy if it is below the moving average here. Now, this is the 8-hour. That's going to give us some very accurate details in a bull market. But if you're a person that's like, hey, I want to snipe like the lows of a bear market, boom, put this on the weekly, and the Hatter does a trick for you. So the lows for a bear market puts you at a good risk to reward ratio, but then also keeps you below the 100-week moving average here. So opportunity here, here, and then obviously things take off. And then once again, it also subsequently gives us really good information on overheated readings, aka sell. And so we get the tops letting us know sell potential DCA out the market. So we can use this alongside some of the other on-chain data that we're going to be tracking as well. So we got a positive reading on the Hatter. So BTC looking pretty bullish. We're going to see if we can proceed to start to pull in more liquidity over this next week. We have some Fed information that's going to be coming in, CPI information that's going to be coming in this week. So we'll see how the market wants to respond to that. So outside of that, we talked about some potential like basic investment strategies pre-having. So what's the checklist? Now, the checklist is this. We need to talk about diversification, which we softly did, research, security, and regular monitoring. Now, the key thing is this: as an investor, a lot of people like to do maybe one out of these four, maybe 2 out of 4. I'm trying to encourage you guys to do 4 out of 4. Now, why is that? Diversification, and I'm not talking about, oh, you got to go into real estate and stock. I'm talking about diversification within crypto. Diversification within crypto is really in diversification of your knowledge. Have you actually spent a day looking into protocols that you don't really know about? Have you spent a weekend doing this? Have you spent your 100 hours this cycle doing research? Like, create these goals for yourself, because when I got serious about crypto, I had goals not in terms of how much I wanted to make. So another little piece of alpha, and this is mentality, y'all. Like, I kind of use the same mentality when I was playing ball. When I was playing ball, I wasn't worried about like, oh man, how much money am I gonna make after this game? At the end of the day, I'm just like, yeah, I know I'm gonna make a nice check. I was worried about how can I play the best. So to play the best, my best, what does that take? A lot of freaking film study, a lot of extra reps in the weight room, a lot of extra time being spent outside of just practice. So with that being said, outside of just doing your DCA, what extra are you doing? This is my challenge to you. If you're watching and you're just like, yeah, I think I'm doing okay as an investor. No, you don't want to be doing okay as an investor. You want to be an investor that's like solidifying yourself as in your confidence. And therefore, your confidence is going to lead to you just making better decisions, truthfully. You're only going to be confident in the things that you know. You need to have the know-how, you need to have the experience, and you have to have the guts or the cojones to go ahead and just do it. So forget about what everybody else is talking about. Focus on you. Make some goals for yourself. Maybe the goal post-halving, so after this halving, maybe, all right, let me make sure I do an additional 100 hours of studying the stuff that I already have. So emission schedules, something that maybe you should look at. Maybe you should look at, are there any structural things, any updates to the chain? For example, did you guys know Phantom? They have a stable coin that is now fully backed, working with Circle. So there's going to be added liquidity now being able to bridge to Phantom now, thanks to that, thanks to Wormhole as well. Did you know that? Did you go and study that? I did that all day yesterday. So for example, these are things that we should have as challenges to ourselves that don't have a dollar price attached to it. This is how you really get the gains. And I'm just being honest. So, but diversification in your knowledge in research is one of the main things I want to talk about. Obviously, coins, that's basic. You shouldn't just have one coin. I would venture to say that a good portfolio, a mix, is anything in between 5 and 10 coins. The more money you have, the more you can probably mess around and get to that 15 coin mark. Because what I will say is this: if you're a person that has 20 coins, and I've done consultations with people that do, what you're gonna find out is you're gonna forget where you put this coin, your cost basis, what your actual rate of return may be potentially. You're gonna not know how to off ramp everything and get it back into your stable because things have updated since the last time that you bought it. One thing that I said, and I'm gonna give this away for free. One time I suggest to everybody in consultations that I do with them is practice taking profits in small amount, like just, hey, I don't know, whatever. Let's say there's something you got a 3x on. Take $100 from it, but practice what that feels like. Because I promise you, you don't want to fumble the bag, fumble the ball when you're trying to take, I don't know, 5 figures, 6 figures, 7 figures of profits off of something for like the first time. If you've never actually gone through the process of liquidating that into a stable, sometimes you may not be able to liquidate into a certain stable if liquidity is low. How do you function around that? Learn about liquidity pools, right? We talk about those things in the vault. But then again, what if you're in a scenario, it's like, oh, snap, man, I'm trying to bridge this back, but I haven't done it yet, and I'm confused where I need to send this, or what, there's new bridges, this bridge don't work no more. Like, you want to go through these things before it's time to actually do it. So, for example, this is like doing the walkthrough before it's game time. Please, 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 please do that. So if you're just thinking, oh, I'm just going to sit back, I'm going to buy today, I'm going to just sit back and not do anything, and you have altcoins especially, not do anything until it's time to sell, bad idea. You're probably going to mess something up. Not going to say you're going to mess everything up, but there's a higher probability that you may have a misstep. And I want to try to refrain from missteps, right? But that's what I mean by regular monitoring. So regular monitoring is something that you need to think about. Monitoring in terms of like, hey, another goal. You don't have to be the person that's looking at your portfolio every day. I encourage you not to. But as things get more hot in the market, I would say somebody that is serious about this, you don't have to go through like a whole overview with your spreadsheet and looking at, hey, what is your rate of return at this week? Maybe do that once a month, but once a week, you need to say, okay, hey, what have I noticed has been going up more than others? Because what you're going to notice is you're going to notice certain, like I do this all the time. Pull out your CoinGecko, make your watch list of coins that you have in your portfolio or some that you want to watch. You're going to notice in certain parts of the market, certain coins are doing better than others. You must ask yourself why. Maybe because more liquidity is starting to trickle over to that narrative, to that ecosystem, to that whatever it may be. So you need to learn how to be able to move with the waves, being able to feel the trends too. That's how you know when, like you get that gut feeling and you have that understanding of like, man, I've actually felt this whole run up. Not just like witnessed it from afar, but like I felt it because I've kept tabs on it. And so you're going to know it's like, yeah, you're going to be able to sniff stuff out. Hey, this doesn't seem right. This new protocol, it don't look like it's moving right. Right? Like this is how you get the intuition as an investor. And this is not you going crazy over price. Like nothing I'm talking about is actually about price. This is all about how to make yourself better. So key thing to think about. Security. I want to bring something up because I think this is an incredible wallet. Because one thing that MetaMask is pretty good. It's mainstay. Another wallet that I would suggest you, and make this maybe a test wallet for a month if you don't trust it fully. So this wallet here. Let's get this pulled up. So the Rabby wallet. This is a wallet that has a much better UI than MetaMask. I know on certain chains you can't actually see the dollar amount, and so it makes it harder for you to make sure you're keeping up with certain things. This puts MetaMask to shame. I'm not gonna lie. Obviously, you could download it to your Chrome. I particularly say for security reasons, I would venture to say maybe not such a good idea to do any crypto stuff on your phone, simply just because all of the risk. And typically, if you do have a desktop, use a desktop that you only do crypto on. You don't do any other browsing and all that. If you're serious about this, like if you like, this is your future on the line. This is your exit trajectory on the line. Why mess around with it when all you gotta go do is just say, all right, cool, let me use my phone for phone stuff. Let me use my crypto for my laptop or whatever. Maybe you got an iPad just for crypto, whatever. But keep things separated. So that's a security thing to think about. But very secure wallet and access to many different chains. So definitely think about it. now here's the thing. How is the Rabbit wallet different than MetaMask? Smoother multi-chain experience for sure. That's one thing that I can say. But then once again, it has the pre-signed check for security. If you don't know what these things are, I don't have the time to go through every definition. But come through and check it out. So it's Rabbit.io. So another link. And here's the thing. Don't click on random links. I was able to get this because I've had this wallet for a long time now. So I was comfortable doing that. But let's say I didn't know about this at all, and I just randomly popped up on Google and said, oh, like a wallet. What I'd want to do is go on a browser that is like a test browser. I don't really use it for just testing stuff out. And do it as a test wallet first. Maybe throw $100 in there and actually use the wallet before you decide to make a change or make a move. But another thing for security, so that's talking security. But then also wanting to improve your ability to have tabs on your stuff, this wallet may be a good solution for you. And as you can see, integrated for 94 chains. So that's the beautiful thing. Of course, we have Ethereum, Phantom. What are some other chains that, we may want to be aware of? Obviously, Base and Avalanche, Arbitrum. They got a lot of stuff, y'all. The Metis chain, and y'all already know how I feel about Metis. So a lot of good stuff, and things to, like I said, consider when you are looking to have some type of security or better UI in terms of your investment. So good stuff. Let's check the chat. Yes, 100%. The UI does suck, and I can vouch for it. It's old, MetaMask is old UI. What else we got? Cool. That's an interesting comment. So the euphoria froze me up last cycle from taking profits. Yeah, that can happen. But that's why you have to have a strategy. So let's go ahead and get into it. Post-halving expectations. Now, you should never expect anything indefinite, but you can understand probability. So let's jump back over to Bitcoin. And the cream of the crop, this is like the real alpha for the stream, y'all. So, those in the vaults of crypto, they've been on this for a minute. But yeah, the halving profit window. Look at this. All right, so this is something. It took me a little while to make this, but when there's effort and hard work, you get the results. So this tracks every halving. And so for every coin, like, we could even jaunt over to like something like Solana, for example. Let's put this down here for the meantime. So what this does is this yellow vertical line is tracking the halving. So it's going to plot, right? We see the vertical lines there. Yes. Cool. Now, there is a window that it has been pretty dang good. In crypto, nothing is exact or precise, but you want to look at the upper region or upper basin of price, high demand times versus, what does it look like in a low demand time? So I'm gonna give y'all a couple stats. Typically, 40 weeks after the halving, so it's a little bit more than 150 days like we were reading the article. 40 weeks after the halving, those tend to be a really good time to start to potentially DCA out of the market. And we can go all the way back to 2012 halving. So that first halving. If you were an investor at that point in time, so let's do the full price and date range. So that's going to be that first plus sign. You're a person. And this is like, hey, I don't know nothing about crypto. I don't know if y'all can see that. Here, let's pop that off for a little bit. This person was able to lock in something very nice. Cool. So, for example, this person was able to lock in 850% gain. Not half bad. Let's continue on. So, let's say this next halving. So, back here in July of 2016, to that 40-week mark. And obviously, it's more exponential if you go to 80 weeks, right? This person would have locked in, give or take, a 50-week, or I'm sorry, a 50x, excuse me, give or take. So that's pretty neat. We move on to the next halving in 2016, July. So from that 40-week mark, this person had the opportunity of nailing 150%. So, see that 150%. Let's see what if they took it to 80 weeks. So all the way to 80 weeks. Oh, wow. Just right there at the top. Just actually, a couple weeks after. Don't need to get it perfect. But between that and we're talking a 30x. Not half bad. So 50x and 30x if you take it the full 80 weeks. I would venture to say maybe you don't wait for the last minute. Maybe you leave a certain so this is how you do the scheme. You think about and you create these rules for yourself beforehand. Say, hey, maybe regardless of the fact by 80 weeks after the halving, I'm going to take 20% of my major positions regardless. I don't care where price is at. It's probably a good idea because statistics will show in your favor. That's probably a good decision to make. Let's continue on. So in between week 40 and week 80, now we trended up very quickly after the halving. Why? Because it's liquidity injection from COVID versus something a little bit more gradual like 2016, 2017. But I digress. If we talk about just pure statistics from halving to 40 weeks after, you're looking at a nice 5x. And then, we had a muted, Q4 in 2021. Okay. So either way it goes, DCAing out the market is an idea to really consider. Why? Because you're not going to get the most gain as if you sell everything at once, but you become a smarter investor because that's the foolish thing to do in the first place. You're hedging yourself for, hey, what if this area is where we start to max out? So it's nice to have a DCA out schedule, and we talk about how to do that in the vault. But the cool thing about this is now let's understand dynamics. Let's say you took profits because, like I said, we want to put multiple cycles together. So we want to, cycle one, we got to kill it, right? So cycle one, for example, cycle two, imagine this is you being able to compound your crypto. Multiple cycles. Cycle two, for example. So cycle two, because this is how you make it to that aspect of wealth where it's just like, you know what? I don't have to stress about how I'm going to pay this stuff. I think that's one of the best feelings is not having to worry about how things get paid. It's not maybe for you, it may be like, oh man, I got to have X amount in my, just so I can visually see in my account. What I've learned with that through the years is that feeling goes away pretty fast. So, but with that being said, multiple cycles is how you get to wealth, but then preserve your wealth. So imagine, and let's say you don't even get the full move, cut it in half. So maybe you got that 25x here, and then a 15x here, and then a double here. What does that do? So you go from 10,000, give or take, to 100,000 to million, maybe 1.5, whatever. But from $10,000 in the standpoint of doing that in 10 years or less. And it's just by deploying some very similar, and I just gave you guys some bare bones basics, but I'm trying to make it make sense, you know what I'm saying, of why you want to stick around, not just one cycle and call it quits. You got to come back for more. And I'm definitely here for more. So, but for example, this is the key. Now, the key thing is if you do take, let's say through this range, week 40 to 80, you try to take 70 to 80 to 90% of your portfolio. Maybe you want to keep a little bit in. I encourage, you probably want to always keep a move back. But the key thing is redistributing back down to these bear markets. So this indicator does a really good job of letting us know, okay, what are the most advantageous times to do that? So with that being said, 135 weeks after the halving, nice DCA. So you're going to see here in yellow, so here, here, and here. It's funny how time being your guide can help you survive, right? and really thrive. Okay, basically, if you just take some profits in between week 40 and 80, and then you redistribute it 135 weeks after the halving, and you slowly trickle that in as prices go. What does this do? You see the dots going from yellow to green to darker green. That's letting you know how quickly that we're getting back to the next halving. So, for example, these are actually spread out in between 12 weeks apiece. So, just like a little bit like, okay, once you get to that dark green, let you know, oh, hey, price typically starts to go pretty good. And, as we can see, we take those measurements. But 135 weeks, y'all, and that's the key. Redistributing all of those profits or majority of it. Hey, maybe you say, hey, let me piece some off and go buy a house. But you know what? Maybe an idea is pay for it cash, man. Like, who wants to have a whole bunch of debt around? Because you want to be able to have all your earned income that you make during this bear market to be distributed into this time period before this next halving, for example. I mean, these are ideas that just make sense, y'all. And I'm not telling y'all what to do. I'm just giving you guys thoughts. I'm giving you guys game theory. I'm giving you guys life, how to like really win financially, like truthfully. And I'm not talking about price or predictions or, hey, you got to have this much. I'm just talking about, hey, think about what are the options that you may have. And these are things that have proven to give you a better opportunity to do this thing the right way, using time, not just price as your guide. So with the halving coming, so let's go ahead and do a little prognosis here. So with the halving coming up just in about a couple weeks, we can essentially say let's go out 40 weeks from here. So that's going to put us just about, let's call it, let's see, 40 weeks from mid-April. So 40 bars. That's going to take us into February of 2025. So write that down, y'all. February of 2025. You need to take a look, like, and not before. Just be like, hey, let me just monitor or something. But like, you may want to look at your portfolio and say, is there anything in like 30, 40, 50x that I might want to maybe just start to take some profits? Like, why do all this hard work if you're not going to realize the profit, y'all? Like, so 40 weeks, that's February of 2025. Look at your investment. Look at your diversification. What outperformed other things? Stuff like that. Then you need to start thinking about how you're going to make your decision. So the window is there, and then we're going to take one to week 80. Week 80, after the halving, is going to bring us into, you guessed it, Q4 of 2025. So that's November of 2025. So I'm going to just throw a little box here and give us like the net of just how to conceptualize the next move that we may see within crypto. We don't know how high price will go, but if we use time as our guide, we see the cyclicality in this macro trend that Bitcoin has. And we may venture to say somewhere in this box is where you want to do a lot of your bidding. Just like, for example, in that box was a great opportunity. And the key is you're going to have a higher probability of making sure that you make money. It only may be 100%, 200%, but the key thing is you still take those gains. And as long as you come to play the next cycle, you're going to give yourself an opportunity even greater for the next cycle. But this is like down here, like this is like the, hey, go ahead and get in and get hard. Like, go ahead and throw the kitchen sink. Go ahead and throw your dog in there. Sell those rims that you don't really need. Go ahead and pick up the extra shifts, but go ahead and chop wood, carry water. Great book, by the way. But this is, when things start to get realized up here, right? And there's a lot of on-chain metrics that we'll look into as well. So if y'all have any thoughts, any questions about that process, definitely put it in the chat. But also, we're on this all day, every single week, on this channel, and even more detailed in the group. So this is something to think about, y'all. Just a little alpha. So I'm going to take that off for now. But yeah, good stuff. I want to look at Solana briefly, because what happens if we put another 0 on Solana in due time. So let's see here. Let's go to Solana. Where's Solana price at today? 180. So we were up at 200. We consolidated a little bit, but in general, Solana is in this very, very nice macro trend. This macro channel is very bullish. 100%. Hey, we got to go ahead and talk about it just briefly. Let's go ahead and add another zero. But in due time, understand the network like y'all can understand Solana is like number 3 for real, you know. Network activity has solidified at this cycle, y'all. If you haven't noticed. So with that being said, the macro trend is taking a breather, but when things take a breather, these typically are some really good times. So for example, in that person that's just starting in their journey, it might be 50% Ethereum, 25% Solana, 25% dog with hat. I don't know. Just whatever. I like dog with hat. I mentioned almost every stream, right? Yeah, I think dog with hat is gonna make it to $10 pretty soon. Pretty soon. Just wait. But anyways, so with that being said, with this macro channel that we're in, we're coming up on this median point where we are probably going to stagnate. But once we break through, you guys, this is when things get excited. This cycle will probably venture, somewhere towards the top of this channel. Who knows where we will be? But, we're heading in that direction. The trend is way too strong because same thing. If we were to zoom in, the wicks at the bottom of these candles are still telling us the constant bid over these 2 weeks before we have a nice, bullish run. And so the key thing is this. Let's do a fib extension. So take the bottom. Consider all that action. Like we have so many buy signals right here, like from the Hatter, especially like on the 3-day. Like so the Hatter, look at this. Like, man, I'm scooping all of this down here. And I'm gonna be honest, I was not 100% sure during that I definitely bought a lot of Ethereum in June of 2022. Ethereum was like $900, give or take. But what really solidified me is how we structurally stood after this moment in FTX. So like these buys for Solana for me were no brainer. And so it's nice, man. Like 10x's in crypto are given out if you are willing to DCA in the bear market. But there's much more to go from here, obviously. Now, Solana going into its second cycle. So we talked about Bitcoin cycle 1, 2, and 3. Solana now looking to jump into its second cycle. If once again we do that Fibonacci extension, and one thing that I really like for these Fibonacci levels is simply that a lot of people use them. It's not gospel, but a lot of people use them in terms of de-risking, but also in terms of looking at price movement. So one area that I definitely have my eye on to the upside is going to be this juncture of where you see how this median line, how we tend to either bounce off it or we play around right below it or around it. And then so the moment when we catch ourselves coming somewhere in between this median line, and if we want to kind of line that up with the next fib level of 1.6, this is going to be an area of interest for me in particular in terms of just, hey, what do I need to do with my portfolio in regards to Solana? But as you can see, a lot of things going into their second cycle, they have no problem going through the 2.6, the 3.6, and the 4.2 on this fib extension. Happens pretty regularly, but a lot of the time that like Ethereum went all the way to its 3.6 and Bitcoin went up to its 3.6 in this last cycle. So, if we are anywhere near as bearish or bullish as we were, in this cycle, I think we're going to be even more bullish this cycle than last. In my data analysis, I'm kind of seeing those factors. But even if we were subpar and we only get to the 2.6, for an investor today, right? Like we're saying, going through that 40-week halving profit, 40 to 80-week halving profit window, even on Solana, that's somebody that could still come in and lock in, a 3x and then take that into the next bear market and then really ball out, So that's how you got to kind of think about it. Um, that's base case. Worst case scenario, we're probably looking at maybe like a $400 Solana. But I mean, we're halfway there already. With like us being in maybe inning 4 out of this whole game. So Solana looking pretty good. But really, I just wanted to pop up the halving profit window. So for example, as you can see on, Solana came out before the last halving, like just before, so we were able to get this thing plotted on here, and y'all could see that yes, there is a difference, especially in altcoins that are going to carry the full length of the market in the bull run. Yes, there's a difference between taking profits at 40 weeks and 80 weeks, obviously. But for example, you're an investor in Solana, so maybe this is a layer 1 coin or a coin that's in its first cycle. Now, results are going to vary, but you need to kind of think about, okay, what does this process even look like? Volatility is the name of the game. Solana went up 6x, 7x, a lot of fun, but then it tanked, 70%. A lot of people are like, I knew this thing was going to flop. I see some charts that look very similar. For example, say layer 1 coin starting to get some network adoption. It's in a little bit of a lull, but it hasn't hit its next stride. It hit its first stride, but it hadn't hit its second or third stride yet. So, maybe something to look into. Celestia, something to look into. But then from there, what do you see? In short order, you find that going into that time period, you see anything in between another 12x to give or take almost like 18x. So an investor from the halving, and let's say you were able to see through the volatility, you didn't get scared. If anything, you might have tripled down right here. But that's a 30x. Now, somebody savvy should look at their portfolio and say, hey, imagine you put $1,000 and it turns into $30,000. Maybe you say, hey, all right, cool, let me take my cost basis and keep it rolling. Or maybe you say you might want to take a larger chunk. That's up to you. But I would say, hey, I at least want to make money. So if I'm somebody that's like a new investor, I'm talking to new investors primarily for this stream here, for example. But maybe, you haven't talked about taking profit in an actual real use case type scenario. We're seeing like the waves under which you could potentially do that. Maybe you say, all right, cool. Let me at 40 weeks, if I realize I'm above 10x or more, for example, on an altcoin, maybe I take my cost basis or double my cost basis. So lock in a double at least. So in that scenario where you go from 1,000 to 30,000, let's say you go ahead and take $2,000 off the top. And then you say, okay, well, let's see what the market does from there. But then you want to start to look at some other things. Maybe start to look at some of the on-chain data. What's overheated? What are some of the NVRV ratios? Short-term holder cost basis. How close are we at that? How close are we to this pi cycle top? Questions should be starting to go through your mind. And then you say, okay, well, maybe there's another 3x from that point. Okay, cool. But from your initial cost basis on essentially $28,000 that you had at this point is now something closer to dang near $100,000. At this point in time, you really need to consider a decision. If you're 90x up on something, this is a point in time where you may say, and you're this deep into the cycle. So this is the key thing. Understand you're very deep into the cycle at that point because you're no longer at 40 weeks. You're at almost like 55 weeks, almost 60 weeks at this point. So maybe you say of that almost $100,000, let me go ahead and take 20 grand of that. So take 20% of that portfolio and then maybe let it ride. But the key thing is this. Let's say prices just go down from there. So you are only maybe able to extract 22 grand, but you had 100 grand on the table. For example, let's say this part didn't even happen and we go into the bear market. You would then be able to take 20x more money into this portion here, this bear market, and distribute it through that time period. And that 20 grand could then proceed to, for example, and I'm just giving y'all examples, that 20 grand could already basically essentially be 200 grand. So you don't have to, what I'm saying is you don't have to get it all in one swing. I know a lot of people try to become millionaires in one cycle. Yes, it can happen, but you need to have the longevity in this thing to be able to say, okay, cool. I just know that I can redistribute in the bear market, because guess what? The bear market is going to come. So keep your eyes on the prize. It's about growing wealth, not just buying the Lamborghini, adding another zero to your net worth, and using things like this. And then let's say you keep a nice portion to that 80 weeks. Well, guess what? You would have hit it right on the head for something like Solana, because the indicators are saying, hey, 80 weeks, and that was the exact top, about $300. So with that being said, use helpful data to help you be a better investor, but learn along the way is kind of what I'm saying here. So a lot of great tools, obviously, with the Hatter as well. Put that on like the monthly, and you probably would see a nice signal there as well. And if we were to take everything else, so the Hatter's also showing us on the monthly chart. Yeah, sell signal. So we got a sell signal that came through at about like 230 for Solana after that bull run. So that's like your secondary check. So, that being said, man, time and effort are important in this market. I gave y'all a little bit of thoughts of how to see the halving, the functionality of it, but then also just kind of, portfolio allocation, some basics of just investing. Not telling anybody what to do. But yes, you know what? I'm with you with this. I'm still going to get the Lambo though. Yeah, like here's the thing. My challenge to anybody saying, hey, I'm going to get the Lambo though, my challenge is saying, okay, before you do that, you should ask yourself, can you buy at least 5 of them cash? If you can't buy 5 of them cash, truthfully, honestly, I don't know if you can afford it. That's what those are my rules personally now. I've had very nice cars, Ferraris, R8 Audis, like I have very nice stuff. And the rule I used to have was like, if I can buy 2 of them cash, I can afford it. I bumped that up. With crypto, I'm just like, no, if I can't buy 5 of them cash, I don't need it right now. I'm just wait till I can buy 5 of them cash. That's good risk management. Because even if you do take a loan on that vehicle, whatever the case is, let's say you put 30 or 40% down, carry a note, whatever the case is, you have so much backing you still in assets. And I would say not even having the cash, it's about just having applicable assets. That's even more important, in my opinion. But yeah, go ahead and get that Lambo if the bankroll is looking right. So what, like a Huracan, and because I'm into cars, man. Like I truly am. I have a here. Let's go ahead and put this on the main screen, and we'll finish this thing talking about cars. So, I have my sights on a, let's see, I would say a 2019 Huracan Performante. And now for me, I just don't go for any cars. I was in the car rental business for some time. And going for like a base car is like, nah, they're gonna depreciate in value too fast. Like, so going for numbered cars, like there's a good amount of Porsches out there if you can get your hands on one, or if you can get an allocation. So like a GT3 or S, that's something that's kind of on my list of things to just look into, right? But then also, I got rid of a car that I loved, and got rid of it to buy more crypto. So be straight honest with that. But I really want to try to get back into the upgraded version of what I did have. So the 458, but I want to get a Speciale, man. Those are hard to find, but they're really good cars. They maintain value pretty dang well if you can get your hands on one. So, but yeah, man, like if a car is on your list, like I'm a grown man. I love cars. I know a lot of you guys too, but just be smart about it. You need stability first in your life before a car. So, for example, and this is gonna be an opinion I give. A paid off living situation will serve you better over the next 10 years versus a nice car. So, for example, and you may not have to have your forever home. You just go get your starter home. It depends on where you're at. If you're in like the Midwest, like consider moving even to make it happen. Like in the Midwest, you can get something super nice for like 300 grand, brand spanking new. That's going to last you for a long time. Just pay your taxes and insurance every year. Okay, cool. Whatever you're gonna pay that 5 grand, 6 grand a year. You can go work in McDonald's and make that. So, but then if you actually do have a nice job, guess what? All of that earned income, you could just shove it into crypto. That's like that's literally like the best feeling. Like, trust me, y'all don't even understand. It is the best feeling. So, because the thing is, if you guys go and buy a fancy car, if you don't get the right car, it's gonna depreciate. So, for example, you're gonna buy that $200,000 car, that $100,000 car, give it a year, it's gonna be worth like half if you drive it a lot. Because having nice stuff, you want to enjoy it. Like I'm not a part of like the car collector group that's like, oh, let me just buy this cool car, but just not drive it. Like, nah, man. It's like, if I buy a car, I'm gonna drive this thing. You know what I'm saying? So at least have the bankroll to afford to be able to drive it. That's the way I see it anyway. But that's just me. What we got? Okay, yes, sir. That Aston Martin. Yes, sir. That car is very nice. It's big body too. Very nice. Uh-huh. Let's see. Yes, sir. Of course. Of course. Let's see. Jokes, man. Shoot, I don't care if you're serious, man. Like, I I'm probably gonna buy a car this next cycle. I'm not gonna lie, But we'll see. We'll see. Let's see. Okay, give you a Doge Cummins. But yeah, man. Like, what I will say is this: like, after you've done well in a cycle, don't like you don't have to redistribute 100% back in the bear market. Like, take a portion, take 5%, take 10%, and go live your life. Like, this game of investing is not just all about like, oh, I just want to visually see a nice number or visually see that I have a good valuation in my assets, but it is for you to have some type of impact on your life that may lead to a little bit of joy. You might be able to give some money to your parents that have looked after you for a long time, or you and your wife, or you and a close friend, or you and your five girlfriends, whatever type of lifestyle you live. That's on you. But maybe y'all go and enjoy. Y'all go, like he said, hey, I want to go to Thailand, or just go and do something, do a trip, take you and your family on a nice trip or two. But this is what we do it for. This is why we work so hard, so we can have impact on the people around us. It's not just all for us. Um, so those are other thoughts as well. But I think last thing I'll do. What are we on the stream? We had an hour 30. So I mean, just last thing. So if you all want access to like a lot of the tools that I was using here on TradingView, you're not gonna find them on there. It's on invite only scripts, alongside with the Vulture Crypto group. Let me pull that up real quick. Let's see here. But yeah, y'all, it's pretty easy. Just go to vulturecrypto.com. So vulturecrypto.com and hit the services tab. And yeah, within 24 hours, you guys will be able to jump on in on all this stuff that we got going. Let me put that in the chat. So, but yeah, but to be honest, I have a lot of stuff on here that's free. So, because I don't think anybody should just have a paywall but not offer any type of value in front of it. So, there's some on-chain data that you can track. So you can have just the fear and greed. So, and there's a lot of stuff all in one place. I hate having to go to 7 different websites to get like the general information. So all in one place. You can check the fear and greed on here for free. The USD inflows, and this is key because you need to track the inflows to the exchanges. I can tell you why maybe in another stream. The supply and profit for Ethereum over a 7-day basis. So this is something to notice. We dwindled down, but price is going up. Something to think about. Maybe DCA. Some Ethereum, information as well. Just the daily volume and the net flows. But then again, a lot of good stuff in general. So come and look at the overall crypto market. Let's see here. So key is this: learning to kind of almost like dang near memorize these market caps as we go. So the market cap for Bitcoin is at 1.4. Ethereum is, interesting. It's like a third of it almost, or a little bit more than a third, give or take. Solana at 79 billion. Like, Solana is it's gonna gain. Like, Solana, I don't see being anything short of at least 160 to 200 billion dollars this cycle. But we got some good stuff. Check the overall crypto market. But heat maps. Now, heat maps are a beautiful thing because like same thing. Learn to look at the sectors and learn to look at, okay, over a certain time period, what trends to be doing better than other things on the seat map. So you can zoom in and just, kind of check some things out, get the information. So click on it, go to AVAX in particular. But yeah, so a lot of good stuff. And then also just another way to just view price. So here is a list. Let me go back. So here is a list of, things that seem to carry some narrative with it, to have some type of structural backing in terms of, hey, use case. But once again, something that's like showing of a mixed portfolio with some things that are keeping us inspired. What do we have here today? We got Hex up 16%. So guess what? You can get all this information. And yeah, we might have to go ahead and look at Hex in the next stream. That's interesting. Yeah, we gotta look at that. But even better, go ahead and read up on some of the top stories. Understand what's going on in the global market. So learn about other currencies. Learn about gold. Maybe this is what I'm talking about. This is how you do your 100 hours of research. But real quick, let's check the post-chain charts. Oh snap, we got them here on the Vulture Crypto. Oh snap. All right, so let's check the post chart. Up 4%. It's pretty modest. Nothing too crazy. Here, let me move myself out the way. Pretty modest. We had a little bit of a down draw, but y'all already know how this liquidity game works. Don't worry, it's coming back. It's a really good DCA opportunity on PulseX and Pulse, y'all, and the incentive token. So checking the buys, checking the sales. It's pretty even on both sides. Decent volume though, 4.5 million for the day. That's pretty good. Yeah, but once again, so a little bit of alpha, like learn, okay, how are the whales operating in recent times? So what you may ask yourself is, hey, when's the last time there was someone who bought at least a minimum of $20,000 worth of Pulse? And as you can see, right, there's a big buy, 66,000. Not bad. And so we've got some activity as of even today, so some big buys, but also some big sales. And see if you start to notice some of the same wallets, and that may be helpful for you. So like I said, just little bits of information of research that can go a long way for you. There's the PulseX chart, P-Hex chart, up 7%, but it's getting sold down just a little bit. Okay. Yeah, I mean, it's at a basin. Like if you were to pop on an RSI on here, I'm pretty sure on the daily it'd probably be on the lower band. So that says DCA all over it. So we got the post chain charts here as well. But even better, what I've done here is I put a whole bunch of definitions. So definitions, right? Learn these terms, learn if you haven't. But if you need help navigating all this stuff, because I get it can be a lot. Like I understand it can be a lot. Just go ahead and jump in. Hit the services tab. Click this join now. So like I said, you're going to get all of those indicators. Like, so I only showed 3. There's like 7 of them for y'all to choose from. And inside, I kind of show you guys how to use them to y'all's benefit. But then also DCA alerts. What's on discount? Talk about allocation, all that kind of stuff. Tax strategies when it is time. That's the best thing of like why it is good to be into investing for a long time. You get to meet some cool people. So I have some really good professionals in terms of tax mitigation and estate planning that they've done all my stuff in the past, even like when I was playing ball. So just really good resources, and a whole bunch of guys that are on the ball. But click to join now, and yeah, within 24 hours you'll be able to get all this information and be good to go. $69 per month. And the question what I tell people is this: let's say you tied yourself into this for the rest of the year, and it's monthly. You can quit whatever you want, but let's say you say, all right, I'm a sow a seed for the rest of this year. The stuff that you may learn inside, if you think that there's a chance that you may receive 5x or 10x, which definitely, I'm only talking about a certain few things here on YouTube, but that's what it's all about. You have to be able to get the information to solidify your success. A lot of times, it just has to be taught to you. I mean, for me, I had to be taught a lot of things, but you got to be willing to be a student, you know. So, but at the same time, you know, we all in there getting the butter from the duck, is what I like to say. So, we get it done. Let me put this link for y'all that may have some interest real quick. But yeah, just a little baby plug, nothing too crazy. That's it. So yeah, I appreciate y'all for coming through. Do we have any other thoughts? I think that's it. Definitely have your checklist like checked off. So create your strategy. On your checklist, you should be putting get into the vaults of crypto, obviously. But prepare for some volatility, not necessarily on halving day or even like the month before or after, but in the months after. I'm talking 2 months to 4 months after. Expect some volatility, y'all. And we'll see how that plays out. So, with that being said, I appreciate y'all for coming through. We'll be jumping back. I'm going to be back on stream this Wednesday, so 8 p.m. or 8:15 ish, give or take Central Standard Time. That's 6 p.m. Pacific, and then on the East Coast, that's about 9:15. And if you're somewhere else in the world, do that conversion. But yeah, thank y'all for coming through once again, and I'll catch you guys on the next stream. All right, peace.